here's how I'm thinking about the March meeting. And I guess I would start, of course, with the U.S. economy, which is very strong, the labor market extremely tight, and inflation running well above target. The way we think about our work is we develop working plans for making adjustments to monetary policy over the course of the coming months, and then we are flexible as plans meet the real world. So we're never on autopilot, obviously, and at a time like this, what we aim to do is lay out our principles and then, with whatever clarity we do have, and then proceed to implement those policies carefully and nimbly. So coming into this meeting, let's say before the Ukraine invasion, the committee was set to raise our policy rate, the first of what was to be a series of raises expected for this year. Every meeting was live. Decisions would be based on incoming data and the evolving outlook. I also expected we'd make great progress on our plan to begin to shrink the balance sheet. And so the question now really is how the invasion of Ukraine, the ongoing war, the response from nations around the world, including sanctions, may have changed that expectation. And so it's too soon to say for sure, but for now I would say that we will proceed carefully along the lines of that plan. The thing is, the economic effects of these events are highly uncertain. So far, we've seen energy prices move up further, and those increases will move through the economy and push up headline inflation, and also they're going to weigh on spending. We're seeing effects on other commodities, and perhaps from declining risk sentiment and weaker growth abroad. The thing is, we can't know how large or persistent those effects will be. That simply depends on events to come. So this is where that leaves me. I do think it will be appropriate to raise our target range for the federal funds rate at the March meeting in a couple of weeks, and I'm inclined to propose and support a 25 basis point rate hike. We're also going to write down our new summary of economic projection, individual forecasts, which will show each participant's views of the path forward in the economy and with rates. I also expect that at this meeting, we'll make good progress toward an agreement on a plan to shrink the balance sheet. We will not finalize that plan at this meeting. We'll do that when we think the time is right at a coming meeting. The bottom line is that we will proceed, but we will proceed carefully as we learn more about the implications of the Ukraine war for the economy. We use our tools to support financial stability and macroeconomic stability. We're going to avoid adding uncertainty to what is already an extraordinarily challenging and uncertain moment. So that's how I would think about it.
Let me word it this way. How sweeping do you foresee the ripple effects through the U.S. financial system? Is there an effect on us as those actions take place?
With big actions like this, there may well be unintended and unexpected effects, and hard to say what those might be. In the economic sphere, you're seeing, not directly to your question, but we're seeing concerns over palladium and neon and corn and wheat. Shortages of those potentially, but so it would be difficult to say exactly what the effects could be over time. The United States, our financial institutions and our economy do not have large interactions with the Russian economy. It's a relatively small thing, and it's gotten smaller and smaller in recent years. So there wouldn't be direct effects from these kind of things on the U.S. economy. It's hard to think what the second order effects might be.